Welcome to Prospecting Purpose, where we explore mining's role in shaping a sustainable, socially just, and brighter future. I'm Liz Friel, your host for the series, with rotating guests on every episode. Today we'll be continuing to talk about the impact of financial changes on the future of mining, and in particular, exploring how changes in mining finance, and venture capital in particular, are stimulating much-needed innovation. Joining me as my co-host today, I have Peter Bryant, a widely recognized digital transformation and sustainability thought leader and serial entrepreneur, with a special focus on the intersection of venture capital and natural resource innovation. Peter is an advisory board member at venture capital firms Chrysalix and Foundamental, managing partner of Clareo, as well as being co-founder and board chair of the Development Partner Institute. Welcome, Peter.
Hi, Liz. Great to be here. Thank you. Thanks for having me.
Super to have you on the show.
Yeah, good to be here.
So before we start, I want to ask you, what first drew you to the mining industry?
Well, Liz, that's a very interesting question, actually. It's kind of probably accidental. I was in the software industry for 25 to 30 years. And I first came across the mining industry actually in the mid-'80s. And then I really never had much exposure to them until I came to the US and started up strategy consulting 16 years ago. And Rio Tinto approached me, and that brought me right back into the mining industry. And have been inside the center of it ever since.
And the rest is history.
The rest is history, yeah. And history's still being made.
Awesome. And so through that time, you've continued to work a lot on strategy and innovation. And that's really what I want to talk about today with you. Now, innovation is this really trendy subject these days, and we know the world needs to be doing an awful lot more of it, especially as we enter this age of exponential change, from technology to the need for climate action to solving social inequality. We know innovation is going to be critical to solving humanity's most pressing existential challenges. But when it comes to mining, this is not something we are very good at. So I feel like we're one of these industries that really wants to be doing more, but we don't have much of an innovation culture. Now, as someone with expertise in this area who also gets mining, I'd like to ask you to start with telling me why you think this is the state of affairs in the mining industry.
It's an interesting question, Liz, and I think the result is, in the late 80s, the mining industry, because of low prices, essentially gutted a lot of its innovation capability, as well as the innovation capability of its supply base, and has never really recovered. And one of the things I've observed is this kind of persistent underinvestment in innovation. So our research and the research of other firms shows mining is probably investing less than half of 1% on a good day in innovation, with the next industry being manufacturing at 1.5%, 2%, oil and gas is around 3%. So when you persistently underinvest in innovation, that reduces capability, does not signal the market well. So I think that causes just kind of this underperforming in the innovation area and not kind of getting the gains that could be appreciated from a lot of the technology innovation of the last 10, 15 years.
It's insightful. Makes a lot of sense. I didn't know that piece of history, actually. But of course, it's not all bad.
No.
So next thing I want to ask you is what kind of innovation models you're seeing in mining that are working well? Because I think we do have quite a few really interesting examples.
No, and we do. And I always want to kind of emphasize this is not a zero-sum game, that we're starting from a clean sheet, is there are good examples and we just need more of it. So something I've seen are interesting. I mean, I think two mining companies that I think both package it, message it, and execute on it well are Anglo American, which I think is really the leader with its Future Smart program, which is a highly collaborative open model. I've been very involved with that since the beginning. Tech, I really like their Race 21 innovation initiative. It's very focused. And what these programs do when they're so well articulated is it really galvanizes the organization internally to be innovative, but also sends a clear signal to potential partners that this is a strategic imperative for the company when they put it out there. Other ones that are interesting, Anaconda, which is a gold mining company in Northern Canada, a junior producer, did some research leveraging oil and gas technology for in situ drilling, which is a low environmental footprint. And they spun out a company, actually, Nova Mera, which Chrysalix invested in the early stages. On the collaboration front, Hydrogen Forward is an interesting one, which is kind of cross-industry, which I really like to really try and figure out hydrogen challenges, if you like, to scale it. So I think we're seeing, different companies and organizations collaborating, in a broader ecosystem. We just need to see more of it. These are kind of too isolated in my view.
Yeah, for sure. But I like that you also highlighted examples of larger companies and a smaller company too, to show, it can be happening anywhere. But of course, the pressure is on to be doing more.
Yeah.
Cool. All right, so sort of a subtopic, let's dig a little bit more into some of the reasons why it's hard. I know that there's a strong link to the historical and the present state of finance in particular in the mining industry. It influences how the industry operates, how we are incentivized. Our behavior is largely a result of capital market structures and pressures. So for those on the line who maybe aren't so familiar with it, how would you summarize the state of mining finance today? And what are some of the challenges inherent in those structures that are actively stifling innovation?
Yeah, so it's really interesting. So a quick, I guess, hitchhiker's guide to financing. The public markets, particularly in Canada for junior miners, where companies list on the markets and raise capital, that's essentially pretty well dried up. So there's not a lot of available public equity now. So the second area is private equity. So examples of that would be like Appian, private equity fund, and resource capital partners, who actually invest in early stage mines, usually during pre-operation but post-construction. There's project finance from people like Equilibrium Capital that are seeking high environmental performing projects. And then finally, venture capital, which is really the engine of innovation in terms of early stage companies. And that's really in venture funds. And for mining, that's in its very early days. And then finally, corporate venture capital is where the companies have their own venture funds directly and invest directly into companies.
Well, I'm glad that you moved a little bit into the venture space there, because I actually wanted to ask you about that next.
Yeah.
So I think that's a type of finance that we should be thinking a lot more about, and you've got a ton of experience with. So how exactly can venture capital foster innovation in an industry like mining in such different ways from the kinds of financing and investment that we're so used to seeing?
So I think, Liz, it starts with a fundamental belief that you must have that a predominance of innovation, especially the transformative kind, comes from early stage companies. So if you have that as a fundamental belief, which is inherent in all other industries, right, then the fact that we don't have many venture capital funds focused on mining, there's probably 3, it's just not sufficient. And the thing is that if you have a lot of early stage companies can only become impactful to industry if, once the research is done, that there's venture capital that helps fund the company to start and grow in terms of both money under management and money invested. So it's a really, really important ingredient to innovation. So what happens in mining is, because of this dearth of venture capital, is we have a lot of good ideas that are kind of stranded in research, because there just isn't the volume of venture capital to help get them through from the research stage to early stage to growth stage. And it's a well-proven model. Every industry's benefited from it, and I think mining is way behind the curve. But at the same time, that presents a big opportunity to kind of accelerate at this point.
Cool. Thanks for that. So I also wanted to ask, you mentioned in-house venture capital fund, and it's interesting, in most other industries, including our oil and gas counterparts, have in-house corporate venture capital units. I read recently that 350 of the 500 Fortune 500 companies actually have in-house corporate venture units, but we never really see that in mining. What exactly do you think we're missing, and what can we learn from other industries who do have that model?
It's a good question. So, I mean, it all gets back to this kind of belief system in startups and the value, and then our ability to absorb them. So if you take the oil and gas industry is actually a good example. Let's just take BP. That's one of the better ones. BP Ventures invests somewhere between $250 and $300 million a year. And even if you scale that by market cap or revenue, I mean, the mining industry doesn't even get close. And the way they use that is as a strategic tool, very focused around the high areas of strategic value, from an innovation perspective. And they use it as a hand-in-glove mechanism for innovation, partnering. And also it's a key, investing in venture funds is a signal to the market, Liz, more importantly. It signals entrepreneurs that this is an industry that's interested in driving innovation in startups and then engaging with those startups to adopt the technology. In the absence of that, it's hard to convince, because a lot of the key technologies mining needs to apply, artificial intelligence, robotics, come from what I call kind of generic developed soft technology companies. And mining is not an industry that's on their top 10 target lists. And the only way you get there is if you send signals to the market, and that's through venturing that you do that. So this is a really important kind of dynamic. And I'm not sure a lot of mining executives get how this works. Yeah.
Well, and like, for example, if we think about sheer presence of the industry in Silicon Valley, which is in modern history, the world's innovation mecca. I mean,
Yes.
it's where you learn what it is. It's how you figure out what it means for your industry. It's bizarre. We are pretty much the only major industry without some kind of permanent presence there. So
Yes.
I would suggest we're probably missing something by not being in the room, so to speak. What are you seeing in the venture capital world that we should be taking a note of?
Oh, I think it's pretty amazing. Actually, I'm always staggered. So there's only two groups that have a presence in Silicon Valley. So Sumitomo, through their big venture arm in Silicon Valley, there's one person responsible for scouting for the mining sector. And yeah, Caterpillar Ventures, obviously a small part of it, focuses on mining, but not much. And then BHP Ventures, which has just started up, hired someone who's based in Seattle. But that's it. The biggest value I always find is not actually in the investing itself. It's in the scouting and all the deal flow you see. So this scout's just seeing deals, hundreds of them a year, interesting technology. Yeah. Some they invest in, some they don't, but they apply to the business. So, if you're not here, you're not in the game. Every industry's found that out. The auto industry, chemicals, steel, they all have representation here. So
it's pretty profound. If you're not here, you're not in the game.
Nope.
And a world is changing as fast as it is.
Yeah.
I remember that Natural Resources Canada also did this report, I think 4 years ago now. And it spoke a lot about this challenge of ecosystems and lack of collaboration. And specifically, it was highlighting the opaque legacy and the culture in the mining industry and the way we're quite closed as being major issues, because essentially we're missing out on cross-pollination of ideas, both within the industry as well as between industry and other ecosystems out there in the world. Yep. So basically, if we aren't publicizing our pain points, then we're missing the opportunities on a lot of different levels, which I found really interesting.
Yes. Yep.
Okay, so, well then how can we signal to the world all the opportunities for innovation that we do have, like to advance our most pressing sustainability goals? Like the opportunity is amazing, but the world doesn't know because we're not there.
Yeah, I think this is a good point that mining is not a great industry for collaboration. Every oil executive makes the point at the CEO level that the challenges they face as an industry are beyond one company, beyond one industry, and we need to get better at collaborating with ourselves and other industries. You just don't hear that language in mining. You really don't. The magnitude of the challenges that we have as an industry, I think requires far more collaboration within the industry and cross-industry collaboration.
Yeah, 100%.
Yeah.
Well, what kind of organizational mechanisms do you think could promote more collaboration like that instead of the kind of self-interest that we see?
Yeah, well, I think I would kind of encourage mining leaders to identify those areas of common interest, and then how can we financially pool our interests? Loose associations are not what I'm talking about. I mean, it has to be a funded vehicle.
So to be creating those funding vehicles, presumably you need something for those vehicles to invest in. And it makes me think of this article that I read last summer from Vinod Khosla. He's a big venture capitalist.
Yep.
Wrote this article. It was specific about the clean tech innovation that the world needs. And he wrote that it'll be coming from what he called instigator startups and entrepreneurs, not from inside any of the big companies in, say, the energy industry. Now, you have worked in clean tech venture capital, you have worked in mining, and you are a serial entrepreneur. So I wanted to ask you what you think about that. Does that resonate for mining as well? Can we do it within the big vehicles, or do we need to be focusing on startups? And if so, how do we get there? Because there aren't a lot of mining startups.
Well, I'll admit first that I'm very biased, but I think that the real transformational innovation that's going to do game changers for the industry, I think is the world of startup companies. It really is. But big companies have a vital role to play in partnering and providing access to IP, knowledge, and other capabilities. Sure. So Lilac Solutions, which is a ion-based extraction process for lithium. So I sit on their advisory board. They got invested in by Breakthrough Ventures, and they're doing some great partnerships. So that's a great example. I mean, that process would have never been invented in a lithium company. It just wouldn't have happened. And it's not a criticism. It just is what it is. And as you mentioned, it's about building ecosystems, which is an art form, by the way.
Yeah. Well, I wanted to ask you, if it's startups that we need, we aren't starting from nothing. We have junior explorers that prove we have no shortage of entrepreneurial spirit. So the question for me is, how do we leverage that spirit to foster these vibrant ecosystems where we get those, quote, instigator startups that we require? so that we can address these big innovation challenges, so that we can work more quickly towards a more sustainable tomorrow?
Yeah. So I have three things for that. So one, we've talked a lot about funding. If there's not availability of funding for these companies, then they'll eventually either wither on the vine or go to other markets where funding is available. Two is different engagement model. The mining industry needs to shift more thoughtfully away from a purely procurement model to a much more partnering engaged model. And then finally, I would say bureaucracy and governance is frankly stifling. So they need to have fit for purpose processes where the ability of startups to work closely with miners and implement needs to be different from the process I have for a caterpillar, for example.
Okay, super. So Peter, when you think about the future of innovation in the mining industry, what are you most afraid of, and what really excites you?
Actually, a couple of things. Two things probably scare me a little. One is, the commodity prices are pretty healthy right now. And I worry that laissez of money, cash flow, and profits shunts innovation to the side of the desk again, just when it appeared to be kind of emerging out of this kind of long winter. So I worry about that. And I also worry about funding, because mining companies do exploration, but they just won't put the right level of funding towards innovation, towards venturing, towards startups. And so we'll be locked in this loop of being isolated from a lot of wonderful technology. Because you look at the productivity improvements that other industries have enjoyed and mining hasn't, it's quite staggering. And we're under pressure on water, emissions, and a lot of areas. So what I'm excited about is I think I see enough seedlings planted and enough initiatives to say that there is hope. So I hope we take these as catalysts for doing more across a broader segment of the industry.
So a question for maybe some of our younger audience members. What advice would you give someone wanting to position their career paths at a similar nexus to yours? I mean, we're talking about some pretty cool stuff today.
Yeah, thanks, Liz. I don't think there's any one path, actually. I think I'm in my fourth career now. And the path I took was, I did an accounting degree. I hated accounting. And then I got into software when the enterprise software industry was just starting, etc. But the philosophy I always followed was my mother, and my mother was a Holocaust survivor. So she had always some profound things to say. But she always said, Peter, when a door opens, walk through it. It's only in later life I understood what she meant, was that, we overanalyze the opportunities that present to us, and sometimes we don't take them. And sometimes the door that presents itself is not the right door, but the right door is behind that door. So you've got to be a risk taker.
Okay, so Peter, you know that the show is called Prospecting Purpose. So I have to ask you, what does purpose mean to you for our industry in regards to, using innovation to solve the world's sustainability innovation challenges? What is mining's role in crafting a more sustainable and socially just future?
I think it's a great question, and it's at the heart of the Development Partner Institute, Liz. So I think the purpose of the industry, obviously, is it has a vital role to play in the future of the world, especially around electrification. But I think the industry needs to become a true development partner, where we become a catalyst for prosperity in the communities that surround a mine. And we need to do a much better job in making our product meet the expectations of our customers, around emissions, societal demands, etc. So, and I think those two are fundamental mindset shifts. But I think as an industry, we should adopt both those.
That's insightful. That's good. Well, that's all for today's episode. This is Liz Friel on Prospecting Purpose. Thank you so much for joining us, and thank you, Peter, for being my co-host today.
Liz, thanks very much. Really enjoyed it.
If you want to learn more, check out the show notes for links on all that we covered today. See you next time.